Alright guys, welcome back to another video here. Today we'll be looking at gold. As you know, we did like a video like about a week, 2, 3 weeks ago on gold. Now obviously I talked about how price will be in consolidation since obviously the US market has been on a huge growth, which obviously we can see is due to the um, the plunging gold since what March. We have seen, you know what I'm saying, the US dollar continues to have a consistent growth. Now, so looking at the current market condition we have here, as I said, that price when price comes touches here, we should expect obviously like a a retracement upwards to test what we call the upsides. Now looking, we have a few resistance that we need to look at on the monthly time frame. Now, as we can see here, this price here is very key for is a key support range in terms of you know every time price is tested here, price fails to break and obviously and close below this range. So what I'm saying, it has spikes. Obviously, we can see it 1, 2, 3, and obviously 4 as well. So this is a very key line of point POI, which is point of interest on the monthly time frame we're looking at. Now and just make mark of that. Oh, POI, so POI. And again, POI is price of interest, point of interest. You can say wherever you prefer. But to measure the retracement that's going on, we normally put candle from the top to the bottom. And what we can see is that the 61.8 thus, you know, comes in line with the last, resistance we had before gold had a bullish to the upside to test the highs back in August 2020 during COVID time. So yeah, that's the level of resistance that we're looking at. And obviously also, as I said, the support here is in contrast in line with the 78.60 Fibonacci ratio, which is very key to look at as well. So we were looking at these two retracement price really to see how gold does on the monthly time frame. Now let's go on the weekly time frame and see how price looks. So on the weekly time frame, we kind of have what we call a quite plain or straightforward price action. So as we can see here, this 61.8 is literally a perfect what we call a neckline for this um bearish drop that we had here. So again, we can measure the retracement and you can see that it falls down with the 23 on 3, which is perfectly in line with the 61.8 ratio Fibonacci. And obviously price retraced, and I did make a video saying that if price had tested the 32.8, we should expect a bearish drop on a weekly time frame, which did happen. So if you enter that trade, you probably banked and made some profit. Now, right now, what we're seeing is what we call a double bottom here. So the reason why I say the double bottom is because, guys, pay attention carefully. So we had price drop and tested the monthly support. Price obviously failed to break it, rejected it, and went straight back to test the 38.2 Fibonacci ratio. However, due to obviously news about the US economy getting better, price sharply declined back to the support zone, failed to even touch the support, and obviously shied away, creating a what we call a COCH candle. So change of character candle, meaning that buyers are taking control of the weekly market. So this candle here is a indicator that buyers again have absolutely no problem in coming to this area and entering what we call a buy to the upside. So right now, so most buyers probably have the stop loss around this price range, entered around here due to the fact that obviously they knew that because sellers couldn't break past here for the first time, they ensured that they will make sure not to give sellers the chance of having any form of breaking this support zone here. So therefore we can see that gold is currently in a what we call a double bottom here, causing a bullish pattern. So if anything, I'm expecting the weekly time frame to be you know showing some more bullish strength to test this what we call this 61.8 Fibonacci range that we had on the monthly time frame. So this is very important, guys, that we should be looking to on the weekly time frame. However, we can see this candle here. This candle on a smaller time can be that it could mean that there is a bit of a what we call a resistance here on the smaller time frames. But obviously be that would be discussed on the smaller time frame as we go on. But so far, weekly time frame, all we're seeing is a what we call a double bottom, which is a bullish pattern to go to test the neckline of this trade, as we did not test the neckline. In fact, we tested the break of structure line, which obviously went up to retrace and touch obviously the resistance that had across, breaking it, coming down. Again, same structure, as we call these are all waves. So 1 2 1 2, that's all the market. The market needs to drop, grab some liquidity, grab some obviously some momentum first, drop, come back to collect the profit. Obviously, all these are all profit taken, whereas buyers are absolutely taking as well. So it's all like a handshake, buyers, sellers. So yeah, that's how the market works, guys. So it's very important that you know the difference of when the market is in a retracement or there's a incoming of flow of whether buyers are taking absolute control or not. Okay, now on to the daily time frame. Since we know that the weekly is confirming a bullish, pressure to the upside to test this range that we haven't, visited due to the lack of, bullish, momentum around this area of resistance. Okay. Now looking at, the current structure, we can see that price has formed a what we call a double bottom again. So price came to touch the support, failed, second time failed, confirming a double bottom on the obviously on the lows of this trend here, which obviously this is very important. However, since we have a resistance coming on the daily time frame, so we have a daily resistance here. This is very important. This is a key resistance. The reason why I say this is a key resistance is because we have news coming out tomorrow at 1:30, obviously for the CPI monthly obviously price of goods and service purchased by companies, which is basically in other words, inflation. So inflation is a good indicator to see how the economy of a country is doing, whether it is declining, whether it's gone up from last year this month compared to this year this month. So it's all it just balance. So we should be expecting some news coming out from tomorrow, and obviously that would shake the market. Depending on how the news come about, we would react accordingly. So we do not predict the market when we have high volatility news coming. First of all, we don't predict the markets. We just react to what the market shows us, because that's how we trade as technical traders. That's how we analyze the market. So I'll be expecting what we call, there's so many levels where price could test and obviously bounce to the bottom or to the top. So we have this price zone here where price could test, news could come out, could be good, and obviously affect gold, and gold will come and test the lows of this support. Or we can see if momentum breaks, however, news comes out later, it could. There's a lot of things that could happen in the market. So all we have to do is be patient and be watching the gold market, obviously, especially the news, to see what the Fed's obviously the news for the inflation comes out and shows. Now going on to uh, so let's see what the order flow for the CO2 report shows. Now we see that longs has been closed again. These are all shines, traders are doing. So longs have been closed. That's 3,000 of longs is closed, and 10,000 shorts has been opened. This is very, very important. So the market is, so on the technical side, we're getting on the monthly side, monthly time frame, we're getting what called a bullish momentum. Monthly, weekly is showing bullish momentum, bullish market price action. However, fundamentally, we have the news coming out tomorrow. We have news coming out tomorrow. GDP, I'm not GDP, inflation. So Tuesday and Wednesday, there's huge news coming out all about the US dollar. So this is a battle between the fundamentals and technicals. So therefore, what we do in this market, we just sit back, be patient, and wait for the market to come to us so we can find entries, and whether the price will break, test this resistance, come back and form a bullish entry, or you know the market goes to the technical way where price tests this tomorrow. This news comes out very good for the US dollar, which means the gold is going to go down and test, which is obviously fun, which obviously aligns with the technical side and the fundamental of order flow in terms of short positions compared to your long positions. As we can see, the CO2 report showing a 3K closure of longs and a 10K of shorts, which means that non-commercials are really shorting gold. However, in the long run, gold is looking bullish. But in terms of day-to-day weeklies, we are looking at gold is going to be bearish for the market, as we have based on the fundamentals of the COT report. So yeah, let me know what you guys think in the comments. That's me done for today. Let me know what other markets you want me to break down, and I'll be happy to do so. Like, comment, share, subscribe, guys, and peace.